All right, folks, the bull run wait might just be over. We just went above 60K at 60.5K. I do believe that we will go for one more dip, possibly after the FOMC meeting and the rate cuts next Wednesday, but it won't last very long. And by the time the week after next week comes around, late September, we should be going up again unless some unforeseen circumstances happen. I don't really think the election will really bother it all that much. A lot of analysts have said Bitcoin does have more room to grow, and I do believe the lowering of interest rates, or at least the signaling of lowering of interest rates next week, we'll see that bonds get less attractive and crypto gets more attractive. So I think the bull run wait that we've been waiting on for like 6 months or more since April or March might just be coming to an end towards the end of this month. And I do think retail money is going to come in. The stock markets have been going way up. I think oil is going to continue to come down now that the hurricane thing is over and they've started production once again. Dow Jones went up almost 300 points. S&P went up almost 30 points. NASDAQ went up 114 points. Russ 2K up 53. Despite the Boeing strike, more and more people are coming. More and more people are looking at a brighter side of the market, especially with the rate cuts on tap. I don't think anyone really sees the rate cuts as the beginning of a bear market because this time the rate cuts are happening while the economy is still okay, like the economy is not going down, like the last couple of times they did rate cuts. So overall, the wait might be over. I think we were just waiting for these rate cuts. And since we're likely to get 3 consecutive cuts in the next 3 Fed meetings, I definitely believe people will see that as a big turnaround for all investments, not just crypto, not just crypto and not just like stock markets, but for all investments put together. So I'm really looking forward to the end of the year. The SEC, on the other hand, has admitted that it actually just made up the term digital asset securities, that digital asset securities weren't a thing. So they were basically trying to make up this term and classify everything as this term. I don't think they wanted to admit this because I do think this hurts their case in court. And by the way, they have actually expanded their war on crypto. And even since they were forced to take off Cardano, Solana off the securities list and suing Binance, they've added a couple of other coins. They've added Axie Infinity Sharding, AXS, FIL, and Atom are now securities. They've also added Mana and Sand as a security. So it looks like they are attacking GameFi right now, and then Mana and Atom for whatever reason. So this is still the Binance lawsuit. I think they're just trying to delay as long as possible in the Binance lawsuit because the judge in the Binance lawsuit has already said that secondary markets are not securities, but the SEC is still saying that Binance and its U.S. affiliate, BAM Trading, they're accusing them of facilitating the trade of tokens now considered unregistered securities. So they failed at basically describing the former batch of securities, and I don't really know how they plan to succeed at describing the current batch of securities, because that really doesn't make any sense at all. The SEC has alleged that Binance platforms actively promote these tokens, newly deemed securities, to customers and highlight their potential investment returns. I think the SEC is just saying that like their old tokens are not deemed as securities anymore, so they're basically like putting these new tokens kind of over and hoping that they are deemed securities. I don't think this plan is going to work because I don't really see how the court would rule differently on these new tokens. So basically, like they're saying the SEC's amendment to the complaint also reiterates its position that Binance operated illegally as an unregistered exchange, broker, dealer, and clearing agency. The regulator stated that at all relevant times, Binance used means and instruments of interstate commerce to engage in the business of effecting transactions in securities for the account of others. But that all depends that these currencies have to be securities, which I don't actually think they are. See, like if they really like determined that a bunch of other coins weren't securities and they basically made a ruling that all these coins on the secondary market were not securities, I don't really know how you can make this a security. Maybe it has something to do with the protocol itself, but I don't think that argument is really going to fly. And obviously, like they said, they admitted that crypto asset security is a made-up term, as highlighted by Stuart Alderley, the chief legal officer at Ripple. Alderley mocked the regulatory entity for its twisted pretzel of contradictions, and there were many contradictions. And of course, he laughed at the SEC, saying that regrets any confusion it may have invited. But we all know the SEC thrives on confusion. They don't want clear regulations. So then if they do, they wouldn't be able to go around suing everyone they want. So the retraction of the regretting any confusion from dubbing tokens as securities, the retraction arose from the SEC's lawsuit against Binance. So I think it's like they're saying that these new coins, the way that BAM and Binance promoted them were akin to securities, not the coins themselves, which is a step in the right direction. But I still don't really see how that really would work in court. So they're retracting that the coins themselves are securities, because digital asset security is a made-up term. According to a footnote on September 12th court filing, the United States Securities and Exchange Commission has retracted its long-standing characterization of cryptocurrencies as securities and intends to use more careful language in the future. Good for them, but they're probably doing it because the courts are forcing them to. The retraction arose from the SEC's ongoing lawsuit against crypto exchange Binance for allegedly offering and selling unregistered securities, which they didn't. In a 2023 complaint, the SEC identified 10 crypto assets on the Binance platform as securities, including native tokens of Solana, Cardano, and Polygon. The SEC regrets any confusion by its characterization of these tokens as crypto asset securities, because crypto asset securities would imply they're actually securities, and no longer uses the shorthand term. Of course, they're not going to use the shorthand term because, the courts have pwned them for doing so. So they're saying they're sorry for causing confusion, but I think their hand was twisted and they were forced to admit that they were sorry. But they even assert that by their narrower definition, Binance remains at fault for unlawful securities offerings because of the exchange's tokens continue to be offered and sold as investment contracts. But I don't really see how Binance offers them as investment contracts. Binance does not guarantee any kind of profit. And as far as I know, Binance doesn't really promote these tokens either. So their investment contract argument, I think, is just falling apart as we look at it. Obviously, they really want the case against Binance to go well, because if the case against Binance doesn't go well, they can kiss their case against Coinbase and Kraken goodbye. So they don't really want to give it completely up, because they would have to give all their lawsuits up, and that would indicate that the SEC has been a complete failure in its regulation with crypto, which they definitely don't want to do. So the other thing is that the SEC is backing off SAB 121. Now, SAB 121 was that bill where it was a bipartisan in the House to actually repeal it. And this is the one where banks could not offer custody to clients. So the SEC, wanted to, the government wanted to repeal it, and Biden eventually vetoed it. But he promised to veto it before it was even voted on. He didn't think so many would cross the line and actually vote with the Republicans on this SAB 121 repeal. So if he were to decide again, he probably wouldn't veto it. And, the political climate is getting more and more pro repealing SAB 121. The SEC sees that, so now they're trying to walk it back. They're basically giving people exemptions, or companies exemptions, about hey, if you use a third party, if you satisfy this requirement, if you satisfy that requirement. Although these are very burdensome, they're saying that if you satisfy these certain requirements, these institutions and banks can offer custody to clients. So while it's still very long-winded, it is a step in the right direction. And they're basically citing things that are hey, we know we made this SAB 121. We really, really don't want Congress to appeal the whole thing altogether. And they realize that if they don't actually make exemptions and have exceptions, Congress will indeed appeal this whole thing altogether. And then this time Biden won't be there to veto it. Gary Gensler does not want to look really, really, really bad, like he already does, and doesn't want to lose more face. So I think that's why under his leadership, the SEC is starting to back off on SAB 121 while expanding their lawsuit against Binance and other places. So even though they want to expand, they're having to pull back right now because lawmakers are not agreeing with their actions. And I think Gary Gensler is coming under more and more scrutiny. The rest of this month, we'll see a lot of hearings with the SEC and Congress. And I think Gary Gensler is going to come under even more scrutiny from both sides of Congress. In other news, SBF wants to appeal his court case because he felt like the judge was unfair and he does not like the 25-year sentence. Now, Before we get into it, I'd like to mention that during an appeal, you are not allowed to bring in new evidence. You can only appeal on the evidence that's already been presented. And the evidence that's already been presented is pretty devastating to Sam Bankman-Fried. And he's only 6 months into a 20-year 5 sentence, which means, he has 24 and a half years left on his sentence. Obviously, he does not want to serve that. He wants a mistrial, and he wants a new judge. But I don't think he's going to be able to find a judge that's going to favor him, because the evidence against him, the testimonies from all his execs, plus all the company papers, is squarely against him, and no one really gives two craps about his effective altruism, because that's just not really going to work. So FTX founder SBF has formally appealed his fraud conviction, requesting a new trial and accusing the judge of overseeing his case of being unfairly biased against him. According to a report from the New York Times, last November, a New York jury convicted Bankman-Fried of 7 counts of fraud and conspiracy tied to the collapse of his crypto exchange in November 2022. In March, U.S. District Judge Lewis Kaplan of the Southern District of New York sentenced Bankman-Fried to 25 years in prison for his crimes. So he wants a do-over, but I don't really think anyone really agrees. And I don't really see any real chance that if he files for an appeal that he'll get the case overturned. The appeals court is going to look at the exact same evidence as the trial court, and I don't think there is a judge out there, like not a single judge out there, that would actually look at that evidence and be like, I think he should not be guilty, unless the judge was his parents, which is not, obviously. So I don't he filed a 102-page appeal. Bankman-Fried's lawyers argue that Judge Kaplan was unfair to the FTX founder throughout his trial, making biting comments, undermining the defense and deriding his testimony in front of the jury. Yeah, but the witnesses kind of did that, and SBF was just trying to BS his way out. I think when the appeals court looks at this case, they're going to turn it down as well, and SBF will definitely still remain guilty. I doubt he's going to look at a mistrial at this point. So SBF is probably barking up the wrong tree. WorldCoin actually gains a bridge to Solana. Now, WorldCoin, for those of you that don't remember, is the one that scanned your eyeballs for personal information. Obviously, they offered you $20. I didn't do it because I'm not really desperate for $20. But in other parts of the world, people are desperate for $20 because that might feed their family for a week. So they're actually getting a bridge to Solana. So that might actually invite more people into the project. On September 13th, WorldCoin announced that it is launching seamless World ID integration for the Solana blockchain through a new cross-chain protocol from the Wormhole Foundation. And this is one of the bigger projects of Wormhole. According to a WorldCoin blog post, the Wormhole Foundation successfully completed the cross-platform bridge just two and a half months after being announced as a Wave 1 Community Grants recipient. World ID is built on WorldCoin's Layer 2 Ethereum chain, WorldChain. Its primary purpose is as a privacy-enabled human verification service. It's designed to allow secure, authenticated logins to decentralized applications, dApps, and other services without exposing personal user information. The integration will allow developers working on the Solana network to be more easily build World ID authentication into their apps, with added benefit of cross-chain compatibility. So it's like an easier ID system. Bringing World ID to Solana is a big step forward for identity verification. With the integration of World ID and Wormhole queries, developers can now easily build applications that prioritize real users across chains, improving trust in decentralized systems. Not really sure about that. The scanning of eyeballs for data does kind of irk me. So WorldCoin actually has over 6 million users as of July 31st, 2024. It has faced some legal challenges in some areas, but overall it's prodding along pretty well. They just launched in Austria, becoming the second European country to host its services. The company previously operated in Spain, but concerns over data privacy and age verification controls prompted a voluntary suspension of operations. So they're trying to expand. They've expanded on Solana. Solana has a lot of users, but Solana is also very, very fast and costless for transactions, so they might want to port their services there. So very, very good move for WorldChain. Like I said, I'm not sure about WorldChain and its use cases. I think it's a little bit weird that, they scan your eyeballs, get all this information, but some people are willing to do it for the world coins. And I remember some guy from Cointelegraph, I believe, did actually assent to it, and he did have his eyeball scanned, and he got $20 in WorldCoin. I don't think he was actually interested in the $20 in WorldCoin. I think he was mainly interested to do it as a test. So I do think there's people in other areas of the world that are going to be really interested in the prize, and they have a lot of personal data. And I think think governments can actually find some use for it. So Solana might be gaining a pretty big use case. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.